All right, we'll get going here. I guess we'll start off. Switch, you want to go ahead and sing us the national anthem?
Oh, say.
That's playing. You guys have any questions to start? Otherwise, I kind of wanted to. Wish Brian was here for this one, but I kind of wanted to talk about what I've mostly been talking about throughout my TA series, and that is waiting for the price to come to you and not hopping into trades because you're just sitting down at the computer wanting to trade. Which, when Bitcoin's chopping sideways like it has been, it's the alts are where the plays are, right? And there are 40,000 different alts. So I kind of touched on this a little bit in yesterday's video with charting as many coins as you possibly can and then setting alerts. Alerts are like your lifeblood. That way you don't have to sit there and watch. So what I do in the morning, first thing I do is I'll show you on my screen here. So I have all my TA stuff in one folder and all my new stuff in one folder. And this is what my bar looks like every single day. So I can just right click, open all, right click, open all, and it opens up all my news sites so I can stay up to date on any breaking news, any stuff like that. I got my Lunar Crush up there so I can see what's trending, what has risen in the past 7 days, 24 hours, 1 hour. I can sort them by alt rank, see what's going on, seeing what coins are trending. But this is like my battleground right here. This is what I look at every single day. And when I first sit down in the morning, I'm charting Bitcoin. That's the first thing I'm looking at. And it's been pretty easy to chart Bitcoin lately because for the last, really, if you exclude that grayscale pump, how many days have we been in this range now? 27 days, almost a month in this range. So charting Bitcoin hasn't been that difficult. It's I figure out which way the direction of the market likely is headed, which in this case it looks like it's more downside. And then I'm cycling through alts. The first place I visit is Lunar Crush. I want to see which coins have moved the most in the last 24 hours and in the last 7 days. And then I'm going to those coins, like let's take TRB for example, kind of like I did this morning. And I'm seeing, are we at resistance? Are we getting rejected? Are we in a bull flag? See, I kind of marked out a little bit of a demand or a supply zone here. And then I'm looking, I'm just setting alerts. So I'm going to set an alert right at the entry point to this zone. So Alt H, you can drop a horizontal line right there. And then I'm just going to right click it, add an alert. And then I'm just going on to the next one. So if I come up into this zone, I'm going to get an alert no matter where I am. I'm going to get it on my phone. I'm going to get it on my desktop here. Whether I'm looking at a different coin or not, that alert is going to ping. So I know that if we get up into this zone up here, it doesn't mean I'm just going to blindly enter into a short, but it means that I'm going to look at all the indicators and everything else to see if that is a good spot to enter into a short. And right now, the money flow is starting to kind of round the corner a little bit. We got a red dot print. We got the VWAP started to come underneath the zero line. And do you guys know what the VWAP is and what that means? I'm sure Netta does.
Actually, is the something that you can simply not manage to compute if you don't have volume information, which I don't know how that good is for alts because I never inspected it.
It seems to, it works for me. I don't know what to say other than that. But
your opinion matters in this case. So
I don't just take a trade based off of one indicator either though. So it's like a combination of things, right? So typically when I start to see the VWAP come underneath the zero line, it starts to signify that we're starting to get sell side dominant, or the sentiment is starting to become sell side dominant. Now, the sharper the spike is, the stronger the either buying pressure is, or to the downside the selling pressure is. But you got to take into consideration the money flow as well. So like right now it's not that strong, but the money flow is still in, but we're starting to round a little bit. And then we got we don't even have bearish, so that's on the daily chart. So if we go to the 4-hour chart, you can see there's some bearish divergences forming. It doesn't mean they're going to play out, but you just got to take everything in consideration. So when we get up here, when my alert gets triggered, I'm looking on all that stuff and saying to myself, is the money coming back out? Are we sell side sentiment, bull divs, bear divs, what's going on? And then I will decide if I'm going to take a position on this coin. But alerts, I'm telling you, are the most important thing, especially when you're charting a ton of altcoins like I do every single day. And you start to chart enough of them, that price action's gonna hit. I mean, if it hits one of them during your trading day and you win a trade, great. If it hits multiple of them, great. But it's probably gonna hit one of them. And I'm just moving on to the next. Once I set up my levels on one coin, I'm just moving to the next coin. And usually, again, I'm going back and seeing what had big runs or what had big dumps, what's trending. Some of these, I don't even know if you can even trade futures on them, like Dusk Network. Guess you can. Like this one I wouldn't even trade. That's just too wild.
I ain't been training lately, but I've been there where Brian, I take a day off of work. I'm like, man, I'm gonna trade today. And I'd be jumping into stuff I shouldn't be doing.
Yeah, I do. I used to do that too. I mean, if I had in my head that I'm gonna trade and I sit down at the computer, I'm looking to just be in trades. And like I know I've been saying this and beating it to death, but I mean, crypto and trading and stocks, it really is waiting. Like it's 90% waiting for the price to come to you. And I don't know if you watched the video I made yesterday, but if we here, let me go back to Bitcoin. Like I was saying in yesterday's video, no amount of people like me or people like you can make the price do this. We can't. There's a 0% chance that we can make it pump 6%, right? Those are your trading houses, your whales, your institutions. What a lot of people don't know is that most of these exchanges have sister companies. Like FTX was Alameda, right? I know Binance has one. I forget the name of it though. It's one that the SEC is suing them over, saying they're doing the same shit that Alameda was doing.
I believe they have multiple ones
Yeah.
for redundancy.
The last trades I did where I took off work and I used that Aere trade, and I mean, this tells me what the sentiment is, kind of. or you know, the mid, the small and the whales and everything.
Yep, and that's helpful, but it doesn't paint you like, not one thing doesn't paint you the full picture, right? It's when you put everything together. But my point is that since me and you cannot make the price rise and dump like this, we just can't. No amount of day traders is going to do that, unless like we all get together and say, "Hey, buy Bitcoin." But that's why when I say don't take trades in here, right? Don't try to catch these falling knives or falling rockets, because you're literally going up against billion-dollar trading houses. They have more data than you. They're smarter than you, with maybe the exception of Caroline over at Alameda. They have state-of-the-art algorithms. You're not going to beat them. You're just not going to beat these guys. And while this looks like it was up only, right? You go into like a 5-minute time frame chart. I mean, there's wicks in here that will wick you out super fast. I mean, this is just, I mean, in like 10 minutes, it was a 0.5% up, dump, up, dump. And then timing the top and timing the bottom on these plays, it's just, you're not going to do it. You're not going to beat these billion-dollar trading houses. They have the data right from the exchanges. They know where your stop losses are. And if you think that Alameda was the oddity, and they're not all doing that, I got news for you. So I don't even trade that shit. Like if I missed it, and I missed that initial pump up. You know, I stopped trading at like 1 or 2 o'clock that day, left to go to a dentist appointment or something. And when I was sitting in the dentist, the Grayscale news or whatever came out, and it pumped it. And I just waited. I waited till we got to the top, saw it kind of retracing a little bit. I did ride the short down. But even with the short, the smart money got in up here, not down here trying to catch this fallen knife. And trading is subjective. Like smart money trading price action, it's so subjective. It's the hardest thing for new traders to get and understand, because it is subjective. So the way that I look at a chart versus the way that another, I don't like to use the word professional, but someone who does this for a living and is profitable at it, looks at a chart, and what they see versus what I see are going to be different. The entries are going to be different. And it's going to take a while for a new trader to kind of see that. So I would, as a new trader, not take risky trades. Take the smart trades, take the easy trades, take the trades off of support and resistance. Don't try to catch or time tops and bottoms. But for me, the best time to trade is when Bitcoin is solidly chopping sideways. That's the best time to get in on alts. Even me, I don't trade every day. Like, I'm not in plays every single day. Sometimes I just don't see something, or sometimes my head's not mentally in the game. Sure, Ned, I'm sure you have days like that.
What's the minimum capitalization for an alt to trade, in your opinion?
Like market cap?
Yeah, market cap.
So it depends. So I mean, really, I don't mess with anything sub $100 million market cap. And there's even some coins that are 200, 300, 400, 500 million dollar market cap, but the wicks on them, like the 1 minute wicks on them, are just stupid. So I stay away from them. So I would say it's a combination between what the 1 minute wicks look like for me, and then what the market cap is. So really, I don't typically. Now sometimes I deviate from that if it's like a news or some kind of catalyst, or like with Caspa. I saw Caspa. I don't remember what the market cap was, but it was like 20 or 30 million dollars back a year ago, 11 months, 10 months ago, or something like that. So I saw that it was trending. It hadn't blown up yet. And then I did a deep dive into the project. I liked what I was seeing. I liked what I was seeing coupled with the trending token of it. So that one I picked up a spot bag of. I actually did that live. It wasn't a lot. I threw like, I mean, it's a lot. I mean, it's all subjective, but I threw like $1,000 at it. And it worked out for me. I think I added more eventually. So I guess it depends. But more than anything else, I'm looking at the 1 minute chart. And if there's like 1, 2, 3, 4, 5% wicks, which there are, even in $500 million market cap coins, I'm typically not trading those. It's going to be hard to get a good entry on them. Not to mention, I tend to not enter trades that I can't get like a 7 or an 8% stop loss on. So if I have to go above 7 or 8%, unless like, you know, there's some kind of hack news or some kind of catalyst news, I'm just not trading those. I take safer plays these days than I did when I was like degenning into stuff.
And another question. Many of those charts are typically very, very young with not much history, because maybe the token is brand new. How much do you wait typically before you have something to consider very meaningful history for the chart?
So I do not trade ICOs or IDOs. And this is just me personally. I mean, other people do. I mean, there's people out there who make millions and millions and millions of dollars on Uniswap trading shitcoins. That's just not me. Like, good for them. I wish I could. That's just not my trading style. That's just not what I do. But yeah, typically I don't trade new coins. I don't know if that answers your question or not. If it doesn't have a lot of history and it's tough to TA it, I don't trade it. There's so many coins out there that have the history, that have data that you can trade, that for me personally, I don't see a reason to trade those coins. Again,
what we can infer. Yeah, sorry, go ahead.
Unless it's some kind of catalyst or some kind of news related, you know, thing, then maybe I will take a trade. But typically, even then, I'm not going to trade high leverage. I'm not going to, maybe I'll just do a spot bag. Like I did a spot bag on Rune because the wicks on the candles were so crazy, but I had an inclination that it was going to go up. So I just hopped into a spot bag play on it when it had that huge run up recently. That's the thing too, that a lot of people don't understand. Like, I know I talk a lot about futures. You don't have to trade futures. Like, if you're not good with futures and you don't have the time to sit down, you can just, if you want to short something, right? If some kind of news breaks, like on BNB where they were getting fudded into hell, or the CRV hack, just one times short it. That's just like a spot bag short. Or in the reverse, if something good is happening, some great news breaks or something, just buy a spot bag of it. You don't have to trade futures. Some of these coins have 30, 40, 50, 60% run-ups on just a spot bag. I'll take those all day long. As opposed to, you know, getting liquidated, getting your position stomped out because they got crazy wicks, it hit your stop loss. I mean, TRB.
I believe.
TRB.
Sorry.
I've been talking about TRB now for like a week, and then within that week it's up 60%. That would have been a good spot bag play. One thing I do look for is oddities in trading volume, right? So that doesn't mean I just automatically take a short or a long depending on trading volume, but it is like an alert to me to look into that coin further, to dissect that particular coin. And Teller was TRB was one of them. Did you have a question, Netta?
Yeah, you answered the question.
I find
What
myself now
what we
just
usually say. Sorry, go ahead.
I find myself playing it more safe now than I did in the past. So that means I'm in less trades now. I am not doing degen plays. You know, I'm not aping into something.
Would you recommend to basically anyone to learn first via spot plays and make sure to be profitable, and then maybe consider adding leverage via futures?
Yeah, I don't remember what the statistics are off the top of my head, but most people lose on perpetuals. The vast majority of people lose on perpetual contracts.
Absolutely correct.
Yeah, if you don't have a basic understanding of the market, of price action, of how price moves, you realistically should not be trading futures. Now, that's a very general statement. You know, everyone learns differently. There's idiot savants out there, you know, like Rain Man, who can just look at a chart right away and it just makes sense to them. There's other people who it took me years to get to the point that I'm at. So it was a very general statement, but yeah, if you're losing money, you should not be trading futures, or if you do, you should really reanalyze your risk, right? So 1-2 times leverage, because the goal is not to be a millionaire overnight, because it's just not realistic. All these guys out here that you see, not all these guys, but a lot of these guys, they got lucky. A lot of these crypto influencers got lucky. And then they're LARPing or role-playing the fact that they're good traders, and really they're not. They won the lottery. They won the equivalent of hitting a jackpot at the casino. And while that's fun to chase, it's just not realistic. Just like it's not realistic that you're going to hit the Powerball jackpot.
I got some stats back from Kraken when they first opened the leverage spots. The statistics were kind of impressive, because more than 60% of all open position ended up in gain, resulting in a definite gain. But overall, 87% of people were losing. I leave you to the math over that. So what we can say that, but just by looking at the charts, typically most traders are good traders for the entry part. They typically cannot handle the position once it's live. If you add leverage to that, it's even worse.
Yeah, I believe it. And I also, just from doing this and talking to people and making videos and talking to other traders over I've been doing this for a year now, where I've been like making videos and stuff and talking to people. I've seen people be 50% up and then somehow lose the trade, which that blows my mind. I've seen it. I've seen that. I've seen that, where they are up 50% and somehow they lose the trade. That makes zero sense to me. You need to take what the market is giving you, and man, you need to use stop losses. If you're up 50% and your stop loss isn't into the green, you might as well just pack it up and go home. But I bet you some of those traders you were just talking about too, what happens is they get an entry, they get a good entry, it starts going up, then it comes down, and then they're moving their stop loss down, and then they're just getting wrecked. Like for me, my goal is to get into the green with my stop loss as quickly as possible. Especially if I'm scalping. More so if I'm scalping.
No other question at the moment. We maybe could spend a few words cautioning against revenge trading, because putting the stop loss at break even, it's capital preservation, which is totally fine. Sometime you're going to lose, and the first instant that you have is to immediately find another trade to make the account back at even. In my experience, that is probably the worst idea ever.
Oh, I agree, because you're already like a net negative on emotions, right? Because you just lost a trade. Yeah, I mean, revenge trading, it's a hard thing to teach, right? Because that's like a discipline thing. Like I can't instill, like I'm not a Brazilian jiu-jitsu instructor. Like I can't instill discipline. All I can do is tell you that that's a bad idea, right? But also I kind of went over it in yesterday's video to where, like, let's say you're trading a supply and demand zone. I'm just going to quickly draw them. Like we got a supply zone up top, a demand zone down to the bottom. You know, obviously you want to take your entries here and in here. You do not want to take your entries in the middle, right? So your smart money, your institutions are buying down here, and then they're pushing the price up to the supply zone and rinsing and repeating. Stupid or dumb money, as they say, is trading in the middle. So these are all the guppies, all the minnows swimming around in the middle, just being gobbled up by these institutions. You're not going to beat these guys who are pushing the price up and pushing the price down. They're going to use you in the middle, right, as liquidity to exit their positions down here. So if you get stomped out in one of these areas and the price is up here in the middle, you're just going to be a guppy being eaten up by the killer whales. But discipline and patience and waiting and all the stuff that you hear constantly from traders, that's the hardest part to get. And if I feel like from doing this, the majority of people have to learn that lesson the hard way. Like they're gonna eventually have to come to like we say, like, we have an expression, like, you got to have a come to Jesus speech with yourself. Like, you gotta, you gotta become disciplined and wait, because that's 90% of what trading is. Revenge trading is the worst. You're more often than not, you're not going to make that money back, and you're just going to dig that hole deeper, because you're just so emotionally, like I said, just it's a net negative on emotions when you're losing like that. And then pretty soon that ball just keeps rolling downhill, and you're never going to make that money. Maybe you get lucky, but more often than not, it's going to hurt even worse.
I hear the same stories with the casinos. People lose their money and then they go get more money out.
Yep.
I think that would be called averaging down. Kind of the same thing if you think about it.
Yeah, and Bripto was talking about that, I don't know, a few weeks ago or something, and asked if I ever averaged down, and I didn't even know what he was saying. I was like, I guess I don't do that. That's why, but I don't know, man. Like, I'm two or three strikes and I'm just done for the day. Like, if I strike out 2 or 3 times, that's just telling me that I'm just not feeling it today. I can't read the market today, so I'm just going and doing something else. I do not need to trade every single day. Nobody does. You may think you do, but you don't. If you're not feeling it, if you strike out 2 or 3 times, that should be a warning that you're just not mentally in it that day. And the biggest thing...
Seriously, my first mentor actually had exactly the same policy set for himself. And this
then
is a person who would
you-
spend
you-
45 years.
yeah, you got to stick to it too. Like, you have to be disciplined and stick to your trading plan. So you can't say to yourself 2 strikes or 3 strikes or whatever it is, and you're out, and then keep trading because you're just gonna lose more. You have to make a plan, right? My trading plan is 3 strikes and I'm out. If I hit 3 strikes, I'm done. I'm done for the day. I might be done for a couple days.
Any big events this week? I think where we got CPI. And...
Oh,
Yeah.
definitely.
See, what is today? The 10th. So tomorrow, nothing. Tuesday, nothing. Oh yeah, CPI on Wednesday. PPI on Thursday. Jobless claims, retail sales, and then doesn't look like a whole bunch on Friday. So Wednesday and Thursday should be some pretty big days.
Friday is option expiration, and that usually moves the market a lot. Also, the dollar. So maybe crypto also tags along.
Yeah, the dollar's been just on a tear, and we got that potential. I don't know from previous. Sorry, I can't talk and use my alt key. Like my alt key, I need it for trading view, but it's also my push to talk key. I need to change that. But potential golden cross on the DXY here, and I don't know what that's done in the past or how that even plays out on an index like the DXY. But I mean, you can see when we had that death cross, I mean, we tanked here. When we had a bullish cross here, like what's coming up, and we just ran all the way up to $1.14. So I mean, could we do $1.14 again, you think?
Honestly, I don't think so, because that would mean that the bonds have risen to insane yield levels. Then it's just too much. And typically they pick bottoms on the yield side of the bonds because they yield a lot right now. They are very convenient. They make a good return, and this adds downward pressure on the dollar.
What if we start locking down and start? Because there's a little bit of talk of COVID. I mean, you're seeing it now with, and this is just speculation, right? With colleges now, doing work from home classes. There's some businesses that are having their people go back, or having their people work from home again. Because that gold,
I feel that any kind of crisis will push the dollar down very strongly, because that's what the market wants to see actually.
But on the flip side, I mean, Bitcoin's going to get unless we go up and go up strongly and change the structure of the market to where we're again being bullish, Bitcoin's going to get that death cross too. So it's like dollars rising, Bitcoin death cross. I mean, that's going to be a big psychological thing when it happens.
Yeah, usually that process on Bitcoin is very reliable.
Hey, Aere.
Yep.
There's some There's some news that about the FDIC just come out, and they're not going to tell us which banks they are, but they said that there's some banks that might be failing pretty soon. At least I thought I read something like that.
Yeah, banking industry faces significant downside risks, FDIC chair says. Deposits dropped again. And then I also saw that the delinquency rate for smaller and regional banks is considerably higher than like JP Morgan, for example. Like they're being hit hard right now with delinquency rates. It's the highest it's been, I think, since the 2007, 2008 financial crisis. Kind of keeping an eye on that stuff for a while now because people are still spending money. The consumer is still relatively strong, but it's all going on credit, man. Credit card debt is at its, I mean, it's the highest it's ever been, over $1 trillion. And then you couple that with, you know, the commercial real estate issue, which small and regional banks hold like 70 or 80% of those. What do you call it? It's not a mortgage, is it? What do you call it? The note on it, whatever.
I forgot.
It's gonna be like Demolition Man, where all the banks are JP Morgans, dude, in 10 years. You know, like where every restaurant was a Taco Bell.
I just don't understand anything anymore. You know, like I'm busy as hell. I figured we'd be laying people off and stuff. Yeah, I just don't understand.
It'll be interesting to see what CPI comes in at because the last CPI print was higher. Like it showed an increase. I don't remember if it was month over month or year over year.
Actual energy has been going up lately, so that's something.
Yeah, we saw a 40% increase in gas overnight in Minnesota.
Yeah, also in Europe.
It's about $3.20 here for gas. Yeah, the oil was on a rip, huh? Did we lose somebody?
No, I think that's just my stream. You guys got anything else? Otherwise, maybe we'll get on with our Sundays here. How long are you at the seaside, Netta?
Yeah, that's it's getting dark now. So I'll pack my things and go.
When are you heading back home? Are you there for a while or?
No, just a few days. I'll be back on Friday, and they have to do some renovations at home, so I'll be basically away for the week.
I don't know if you can
gives
see.
You a very, this is going to be a very good leading indicator that markets are going to move because I will not be there.
Yeah, that's how I feel. Anytime I go on vacation. Can you see my screen or no?
Yeah.
So we were looking at going to one of these islands. I think we were looking at this one. Is that a good spot? If you had to go, have you been to Sicily before?
I went to Sicily, yes. In which time of the year we want to do that?
Whenever it's going to be nice.
I suggest you to go for September because in August it's going to be really dry, really hot. Maybe too much to enjoy, in my opinion.
I don't know what this island is
It-
called, but would you say Sicily or this island would be a better spot? Saw some cheap, nice Airbnbs on both, but this island, I forget the name of it, over here had a bunch.
It depends on your preferred type of vacation. Sardinia is best for seaside. Seafood, there is a lot of not much greenery. Sicily is a little hard to navigate because there are not as many infrastructure there, but it's more green and how to say this? People are very peculiar there.
We still have family in Palermo. It'd be cool to go there, but I feel like I don't know if you've ever seen the show. It's an HBO show and it took place in Sicily. I can't think of the name now. It's a recent one, but he was like Italian American and he goes to visit his family in Sicily and he shows up there and they like don't understand what he's saying, so they like run him off. I feel like that's how it would be. Like, hey, I'm your family from America.
But they are aware that you have the same roots and they are family to you. Are you in touch in some
No,
some way?
not since like the first generation Italians, which is like my grandpa. Like they've all passed now, so no, they kind of lost touch when that generation passed.
I have the feeling that
Same
they
last
will
name
be
though.
that's something. I have the feeling that they will be super interested in getting in touch to know each other. People over there are very, very hospitable if you are family, especially.
All right, guys, I think that's it. I'm gonna get on with my Sunday here.
All right, take it easy.
Later, guys. Have fun, Netta.
Thanks, guys. Thank you. See you.